Welcome. This is the all-new Trading Pit where we look at 5 coins and ask, is there a trade? It's July 18th, and here in the XC studio for his first ever solo appearance is Benjamin from JLabs Digital. I am, of course, your host, Marconi White. And since last week, the market has gotten a jolt with the major showing a 10% increase. Is there a trade, or was this just some kind of shorts getting liquidated? We're going to find out. But first, it's rapid fire where I look for simple answers to complex questions. Benjamin, are you ready?
Yes.
Oh, love to hear that enthusiasm. Well, we know that next week is all about the ETH ETF. Let's get started there. Grayscale ETH ETF reportedly has a 2.5% starting fee, a 2.5% post waiver fee. You got to wonder, will history be any different for their ETH product than their BTC product?
I think it won't be any different. I think we'll still have a dump on ETH side.
Do you have any idea why they have decided to put the fees this high?
So some part of me makes me think that they really want the grayscale ETF fund to weed out the older investors, let them go to another fund if they wanted to, and then bring in new guys into it. I'm not entirely sure how smart is that, but it seems to be the plot. Otherwise, no sane person is going to charge 10 times the fee than your competitors and say, hey, we are great.
You know? It seems like product suicide to me. I guess we'll have to see how they perform on the, I guess, when these actually go live next week. But let's move on. The dollar is trading below its 2024 support line. How long until we see the all-time high for Ethereum?
Ethereum, we are going to wait and see how the ETF situation happens next week and how much Grayscale ends up dumping. What is the demand that comes in? But overall, let's say if we take a 6 months to 1 year perspective, I think ETH will definitely be far higher than where we are right now. Maybe we get a good chance to reach the 5 digits level.
Oh, now you're talking some sexy numbers for all those out there who've got hopium going back to 2022. Let's see if it goes right. Is that a 2024 or 2025 perspective that you just shared?
I think 2025 perspective. I don't think
24
is more realistic for it. Yeah. I
Okay.
think 25 is a very good shot.
All right. Well, then if you're expecting those 5 digits, my next question is even more impactful. NVIDIA or ETH, if you have to choose one and buy and hold for the next 12 months, which one do you choose?
Buy ETH, go to Aave, put it on, borrowing, take some 50% APY, get the USD, go and buy NVIDIA.
Oh, so you're just denying the premise entirely. You're just going to do the full trade. You're going to do both.
Yeah, leverage your ETH and buy NVIDIA and just hold it.
Oh, when people say leverage is dangerous, don't worry about that. You just sort of a perfect setup for AI and the new app store that's coming online. I absolutely love to see it. All right, well, let's actually get into the markets. As I mentioned, they've actually done quite well since we last spoke. On last Thursday's show, Bitcoin was trading at 58K. This morning, when I checked, it was trading at 64,823, having already, I think, touched above 65K in the last week. Ethereum at 34.61 and Solana sitting up at 161. As I mentioned, everything about a 10% up over the last week. The ETFs are just continuing to have rocket dollar momentum. Just this week on Monday, we had 422 million coming in, or actually maybe I think it was actually 2 days ago. Yesterday was a lot softer at about 53.5, and GBTC saw again a lot of that outflow. They had about 53 million of outflows, but you've continued to see the ETFs have that momentum. And then we've also seen that softer dollar, the dollar going below the 104, trading at that 103.82. And I think the trend that I mentioned earlier was coming from Jamie Coots, I believe. I want to pronounce his name correctly.
Yeah.
So we're seeing the factors come together. I guess the question is, what are you seeing in terms of the validation points? You were looking for Bitcoin to close, I believe, above that 58,000, maybe 58,500.
Yeah.
Talk us through what you're seeing. Where do you think we go next?
what I was looking at is if we can show some strength above 58,500 levels. Typically, the recovery above 59K was already starting to cement that on the short term, we are still okay. That July can still be a good month. And the Monday run up, like basically Monday opened and we did not stop. Crazy buying happened, and I cannot associate it with anything else than a lag play that happened. For the past month, let's say for the entire month of June, if you look at, I think post mid of June, we started seeing that dollar index was topping out and starting to dump, while stock markets basically were outperforming as well. And we saw gold doing quite well. The only risk asset which was not able to catch up with it was Bitcoin, and it was getting hammered by the German government's sale of nearly $2 billion worth of Bitcoin. And their thesis still is that they did it very gently. Okay. So that's what they call it, as a very gentle sale, like,
Yeah.
okay, nice kind of thing to do. So it seems the two of the biggest overhangs that was going around was Mount Gox and German government sales.
Mm.
And people were, I mean, we were also quite worried, like how far this is going to go, because the first batch of sales, I think it came as a shock, and a lot of people were deleveraging. We saw a drop in OI, we saw a little bit of drop in funding interest, and all of that. And yeah, and it took some time to stabilize, and then people had to understand how they are selling. There was a lot of discussion that have and education that happened around how the German government was basically sending it to a lot of OTC and market
Mm-hmm.
makers, and
Mm-hmm.
it wasn't all a direct sale. And then the confidence started slowly coming back, and we were still lingering around 59K, and without confidence whether this is going to break above, or is it just going to act as a retest and then we go down for another swing at 52K. Then came Mr. Crooks, and he changed the
Oh
game.
no. Okay. All right. We're bringing up the non-political talk on the political talk. Okay. Let's get into the
uh,
reality of what just happened
Look,
over
the
the last
order flow.
the week.
Look, the order flow was there. Like we were seeing some buying.
Mm-hmm.
It was not crazy buying, but at least the selling was getting quite subsided. There were a few entities who were still selling, but we did see a lot of stable coins start to move around. We saw some pretty good sentiment, and other type of news that were popping up all around. So it wasn't that bad. Like, if we saw let's say we had Pablo alert happen, then that would have been pretty bad at 59K. That would have given us more confidence this
Yeah.
was a bearish retest and drop down. We still needed to wait for a confirmation. That was our Thursday discussion as
Yeah.
well, that we have to wait for a confirmation, because this is a large breakdown that we had after nearly a 4-month ranging period. And recovery of the range is much easier to trust rather than like hoping that we'll get a spring and this rushes back up. But Sunday happened, and there was two ways this was going to go. Crypto definitely thought this is a great move, and what I hear from our other OTC desk partners and prime brokerages is that a lot of funds went crazy bullish, a lot of APAC funds went crazy bullish, and that is what we saw on Monday. Monday opened and everybody was buying. They were all
So
like going crazy. Yeah.
I want to hear when they say they go bullish. I have Polymarket pulled up on my local computer.
Hmm.
Obviously, we've got the polls going out everywhere in across the country about who's up and who's down in various states. Donald Trump, according to this, which has about 273 million that's been bet here, he has a 65% chance of winning. He just announced his VP candidate who owns somewhere or did own at some point between 100,000, 250,000 in Bitcoin. If the OTC desk just saying, listen, we think given the explosive events that happened over the weekend, the attempt to assassinate the president, he's now in the lead. The chances of him winning are so great that we're betting on a Trump presidency. And we think that we're betting on that's good for crypto. Is that the bet?
Yes, that is the bet. that is what they're all looking at. And as much as it sucks that we have to count on political statements and political situations and funds are allocating, but that is what is happening as well.
Yeah.
Look, some of the points were there, such as the dollar index effect, stock markets doing well, gold, taking a rise. But we were having a lot of this overhang, which basically made a lot of investors anxious. And, we have this constant flux of influencers who were targeting 30Ks and 20Ks and a new Great Depression, coming aboard and so on. And then when this political situation changed and overwhelming support towards Trump's candidacy and all this started popping up, we definitely started seeing change in order flows. But still, in the weekend, it was still a little bit muted. It was not crazy bullish in the weekend. It was fine. It was still trading somewhere around 59,600, like you see in my chart. That's what I'm pointing out as well. It was still over here, this red line that I'm talking about. It was still well below 59,600, which is still a bearish retest zone. But literally, the game changer was when the day opened. One thing we were not sure of is how will the stock markets react. Like, this was a potential presidential candidate's assassination attempt, right? So we were not sure whether the market is going to have a crazy drop, or at least the stock markets, is it going to have a crazy drop and react to the whole situation with a lot of distrust on the existing government, distrust on the existing system, or is it just going to find that, okay, Trump is coming, he's going to switch on the printer and we just go crazy bullish? To my surprise, the day opened, and till date, we don't see a crazy move. Like, yesterday was a crazy move down on the stock markets, but when you look at the on the Monday move for the stocks, it was not crazy. So what we could see is a lot of short liquidation start to happen as soon as the ETF flows started switching on Monday open, after the after the futures opened, and APAC funds started buying like crazy as well. And this just went rocketing up all the way up. Now, since then on, we are seeing a stall. And this stall is together happening with what is happening in the stock markets. Stock markets are also seeing a stall. We have a mini correction going on. Dollar dumped below the levels that we wanted. We wanted it to dump below 104, and it has lost the 200 daily moving average levels, which is great, which is what we were waiting for. So dollar has given the blessing for now. Now the rest of the markets are trying to catch up. Great. Now we had a liquidation move. We had a bit of buying. Everybody went a little bit crazy. But now the question everyone is asking each other, including a lot of these funds who entered on Monday, like, what now? Where is the follow-up?
Yeah, I want to get clarity on exactly that movement. When we talk about these range changes, we're really looking for spot buying to come in, and really the liquidation points being liquidating a large number of longs, liquidating a large number of shorts is really going to be the explosive move within that range. So are we seeing, it sounds as though we're not seeing enough of that spot buying to really be able to push us north towards that all-time high. And what we've seen just since Monday, while we have seen some spot buying, is really a lot of liquidation of people that heavily shorted this environment, expecting it to go below 52.
Yeah, on Monday, definitely it was a combination of liquidation and also spot buying. There was spot buying, and it was coming from a lot of the OTC desks and ETF funds and a few other APAC funds. So it was not more about retail at all. Retail was going bullish on meme coins as usual. That's why we saw PopCat basically double, and the Trump token went up, and a lot of these speculative tokens basically went up. But when it comes to BTC, the whole move was basically more of a liquidation move and supported by spot buying. But now we need to see that support on spot buying come back again. That is a little bit muted right now. Order books still have to thicken. We are seeing very muted bid-ask ratios in the tight range. So there is a bit of a stall. There is a little bit of dumping down of volatility. So we can see correction all the way down to 62,700, this red level that we are targeting, because that was the local high that was made before the German government started selling at 64K. So we basically have recovered the point where the German government started selling. That's where we are. This is where they started selling.
Okay.
This circle
So
is where they started selling, and we went down all the way to 53K. Now, thanks to future President Trump and Mr. Crooks and a few other entities, we have basically cleared up and embarrassed the German government on that decision, and we have recovered this level. But now
they're
we need
required by
follow-up
law. Right.
as
Yeah.
required by law.
As required by law. Okay. So
As required by law.
I think what people can take away from this though is that there is people betting. We actually had this at the options roundtable. This was mentioned as the number one bet for 2024 is the presidential election in the United States, and getting ready for that. That if Trump president wins, we got Gary Gensler out of the SEC, and we have a pro crypto administration that's ready to really finally help with setting up guardrails or legislation and regulation that can actually help the industry. It sounds like what's happening is that some of the larger players are already making that bet, saying, hey, I think we've seen enough. We know who's going to win this. And they're really preparing for that. And,
Yes, there definitely was a positioning on the bullish front. But what we are now waiting to see is more of a follow-up on that. Because right now, I don't see any follow-up. Like we are
right.
stalling, both on order flow side. There isn't some crazy bidding happening. There is no Coinbase crazy premium either. We are not seeing a crazy Bitfinex premium either. So there is a bit of a muted, situation everywhere, which is fine because we had a crazy move up on Monday, and the markets are now trying to figure out if our judgment was right or did we just get overly bullish.
Yeah. Well, now let's transition before we start talking about some of these tokens. Let's transition. Can we talk a little bit about Ethereum? I mean, it's going to have its big week next week. We're assuming.
Yeah,
I think it's supposed to go. Yeah, we're all looking at these ETFs. I think the information coming out is that they are expected to go live next week. We've seen some of the fee schedules come out. We talked about that at the top of the show. Still don't understand what exactly Grayscale is thinking with having 10x the fees, but maybe we'll analyze that later. Is ETH set up for a really good upshot next week, or is this going to be a sell the news kind of event?
So BTC was a sell the news event, right? And it became a sell the news event because of Grayscale selling. Now, ETHE, the Grayscale ETH fund, ETF, or no, not ETF. It's the Grayscale fund, ETHE.
The Grayscale Trust, yeah.
Yeah, Grayscale Trust. It's also trading at a premium right now. So the assumption is that everybody has been cashing in on the premium, arbitrage it and make some money. Great. But we do know that they are charging these crazy fees so that people will leave, people will sell. I do not know the objective behind that. It is very counterintuitive at times, but they definitely do have a plan. Maybe they're planning to launch a separate fund or dilute entire Grayscale and come up with something new. We don't know what they're planning, but it does seem that they are positioning for outflows. This high fee has no other reasoning. So with that in mind, what we do not know is what type of a demand we will get next week. Like, it is obvious that we have not seen a crazy front running on ETH compared to what we saw in Bitcoin early this year, right? So there was a lot of front running demand for Bitcoin. So many funds were basically rushing in to buy before the ETF buyers come in. We are not definitely seeing that type of a demand for ETH so far. But what we need to keep in mind is that on the regulatory standpoint, there is a lot of discussions about staking ETH, and it's going a little bit on a bullish front as well. So we have to keep that in mind. ETHE will be a driver next week, and how far there is an outflow on ETHE? Is it much higher than the IBIT and other flows that will come in on the Ethereum front? If there is more new inflows, I think we will run up. But if on day one ETHE outflow is higher, I think we will drop. And ETH dropping will probably drive down the rest of the market as well. And that's potentially where we will see Bitcoin and others go down and hit, fill the CME gap that we created on Sunday. I think it's somewhere around 61K. So there is very good chances that we go and hit that. And that could happen next week because of the ETF situation.
So it sounds like from an order book technical perspective, we don't actually see any momentum coming to this, because what you're talking about there is really trying to put a spotlight on what Grayscale is going to look like next week. And we really don't know that yet, right? We don't see anything in the order books yet that are going to tell us that.
Not yet. There's no front running.
Okay. There's no front running. But I want to play the other side of that kind of conversation, is that what you've seen with BlackRock has been nothing short of amazing when you see some of the inflows that have come into that product. Certainly there's a rotation coming from the Grayscale GBTC. I think that has to be noted, but I think I mentioned earlier this week in a tweet, I was tweeting off of someone noting that we've had over 16 billion already come into Bitcoin. That particular analyst estimate, that was going to be for a full 12 months. We've done that in 6 months. You've got Larry Fink going on the media campaign talking about the future of crypto and the future of finance being in these decentralized kind of protocols. Now, I don't know if he believes that or not, as much as he's selling his book. But if he's selling his book, I'm wondering how much powder is he going to put behind this?
So I completely agree on all those arguments. And I do think these ETFs will end up helping to drive up this market, as it has so far on Bitcoin. It did help push up. And Bitcoin is now trying to find its footing and get ready for the next leg. Probably takes another 2 months or 3 months, coincides with rate cuts and other bullish sentiments that's coming on the US front, and then proceeds to move along. When it comes to Ethereum, my point being is the same argument that you're posting forward, that Larry Fink and all these guys, that's all great. I think we'll still run up as a result of all that inflows that comes in. But you have this big banger Grayscale, and they did the same thing when it came to the GBTC situation as well. They were selling nonstop, right? There was a lot of outflows. So the first week, at least, irrespective of how much inflows kept coming, it just wasn't enough, right?
Yeah, it's gonna be overwhelmed.
IBIT did its fantastic job. Like, we were seeing very good inflows in the first 2 weeks, and a lot of those were very good buyers, and we saw a very good run up. But we still need to.
But it remains to be seen.
How
the
strong
first
week was still horrible.
Great.
The first week of ETF was horrible. Right. So that's what I'm going up with as well. Like, this is not a token listing on Binance, which had no vesting. Like, I'm sorry, which had everything vested, right? Like, you don't have. This is not a token without selling pressure, right? So this is a token which is going to come up with a lot of selling pressure, thanks to Grayscale. So it's going to be a game of what is the net flow that day. That will define that week. So why I'm not so over bullish for next week is for the same reason, because we don't see a front running on ETH right now. It's still stalling. We're still at 3,500. Like, I would have expected it to be at 3,700, given a fixed date that has come out. Tuesday it's going to start trading. Like, at the very least go to 3,800, but it's not. It's still stalling. So that's primarily because we are having a little bit of a weak order flow everywhere. The liquidity is a little light. It's summer seasonality. That's why I was a big proponent of not launching the ETF in summer. It's a bad idea. Push it out in September. Do the rate cuts and push it out together in September. Then it is a huge boost. Maybe we would have even seen 10 billion inflow into ETH. That would be like 50% of what we saw with Bitcoin. That would be so cool. But they wanted to rush in. So.
Well, we'll give Gary a phone call after the show and see if we can get a better date to actually launch these. Okay, I think that's a good.
Overall, the perspective is still the same. Like, it is bullish, but is it good enough to run up from here? That is questionable. I do think we are done for the week. I think we do correct from here. Probably we go down and test 3,200 or so. For the short term, this is the deal. For the midterm or long term, let's say on a 6-month perspective, it doesn't matter. Goes down, just DCA, add more. You have to start fearing if we lose this 2,800 level. If we lose that, then we are in great trouble. Then cut your losses.
Definitely have a bottle of whiskey in your emergency kit so you can start drinking if it hits that. Not health advice here, nor financial advice. Okay, let's get into some of these tokens. Like we said, we got 5 of them. The question is, are we trading?
Actually, I'd also like to mention some more things.
Oh,
On
you
each
got
side.
more to share. All right, please.
Yeah. So on each side, another thing is like, so our token rating model on ETH is showing an uptake, but it's not crazy uptake either, right? So if you see what, let me switch off the drawing tool and bring in the crosshairs. So if you see this uptick that we had from 1561 to 1800 over here, you see how crazy was this overall rating that went up. This was somewhere in October. So we actually saw usage go up, right? Gwei basically shot up the roof. I think this was a very good transition period from a very slow accumulation zone, and this actually hinted off a very good expansion that came up, and then we basically doubled from there, right? We're not seeing a crazy uptake despite nearly a 10-15 percentage pump over here, whereas the same 10-15 percentage pump over here was an early indication that we are going to see a doubling of the price. We're not seeing that here because if you look at our other token rating models, when it comes to user score or leverage score or diversity or accumulation, demand shock, all of those are quite muted. The Ethereum usage, gas usage fees is like 1 Gwei and 2 Gwei in the past week. There's not much usage. There's not much demand. So the token ratings model is not uberly bullish, not so bearish as well, but we're not seeing some crazy demand, right? At the very least, on chain, you should see some crazy demand with the ETF situation next week. It's also one of the reasons I think I look at it a bit as a bearish divergence with respect to our ratings model, not seeing a huge uptake. Like even if you take in 2022, we saw a huge uptake at 1200, and then the ratings went up like crazy so fast for the same 15 percentage pump. We're not seeing that right now. So the demand is quite muted, usage is quite muted. That is an additional indication that this is not so much of an attractive move to be purely in Ethereum and fight against Bitcoin. If you are in Bitcoin already, that's still fine. So wait for a pullback, you have a better shot at getting a greater entry.
What's your perspective that this is coming from sort of the meme coin taking all the oxygen out of the room, and so the capital is sitting in these other crypto assets versus it being dry powder where people are really looking for more indication?
I don't think meme coins are doing crazy either. Let me see what we have over here. Let's go to WIF. Yeah, so if you take WIF, we dropped from $4 all the way to $1.5, and then we went up from 1.5 to 2.4. So let's say it's around 75% pump from the bottom, but this is a low cap asset, right? This is a high volatile, low liquidity assets. All these meme coins are. So you are bound to see huge volatilities. Popcat basically doubled from this June dumps bottom, the July dumps bottom. That doesn't mean anything. Low cap assets will always be highly volatile and will end up giving you better returns, but good luck putting $1 million there. You have no shot at putting $1 million over there. It's very difficult to. There's not enough liquidity. You put in $1 million, you probably get a 10% slippage before you're able to chime in and get a very good entry. So it's not comparable. I know a lot of CT influencers are basically saying, instead of Bitcoin or instead of Ethereum, you can put it into Popcat or WIF and you'd overperform. But good luck trying to put a major chunk of your portfolio over there.
Yeah.
It doesn't work that way. Returns will diminish, market will mature, the instrument will mature, right? So that's why you put like 2 to 3% or probably like 10% at most of your portfolio, of your gambling portfolio in there. That's how meme coin allocation should work, because the beta is so high. So I don't think there is a crazy demand over there. I don't think in pump.fund we are seeing some crazy 1,600% returns coming up either. So I think the meme coin super cycle narrative for these past 2 weeks at least is overblown. That they've been shoving it down, but it's not reflecting that way. At least not in the data that I see. Definitely, they did pump better. Bitcoin pumped 22% from the bottom. BIF has pumped 70%. So definitely it has done well, sure. But good luck taking $1 trillion and putting it into BIF. But you can put that into Bitcoin, right? So that's the unfair comparison you get. It's like talking about Pokemon cards and I made 100% out of it. I'm going to put $1 billion in there. No, it doesn't work like that. So that's why I don't think it was so much of meme coins.
It's not the meme coins.
It's not the meme coins.
Sideline.
There is just overall, there was a bit of sideline money. There was a bit of money that sold at 60K breakdown because of German government, and Mt. Gox is coming. The 10-year-old money is coming in. They're all going to sell because they entered at $60 and it's now $60,000. All those narratives, that fear, we went into extreme fear on fear and greed index. I think it was at 29. I think not as low as I wanted it. I wanted somewhere in the single digits because that has always provided the best of bottoms to run to 5x return on Ethereum and Bitcoin historically. So that's what I would have hoped for. But yeah, Mr. Crooks came in.
I'm gonna pin this on you and see what exactly you're looking for to actually take an entry on Ethereum, because it sounds like with both Bitcoin and Ethereum, you're not seeing anything that's really giving you conviction to say, let's take a trade right now. Bitcoin, the spot, and there's no Coinbase premium that's really come out to be very strong. Spot volumes that were strong at the beginning of the week have kind of settled down a little bit. We're not seeing a lot of exposure from a long or short perpetuals. So it's still looking for a range, still waiting for the market to pick up a little bit.
Yeah, I think we get a move somewhat like this. So 3,200 levels was a level that was very important zone. I think we are forming a resistance over here. We are trying to consolidate over here. The best move would be is just create a small head and shoulder pattern over here on the short term, drop it down, and get a little bit of fear. Get the ETHE burden out in the first week, and then shoot up, close the July in a very bullish way. So that is the most optimistic approach I would look for, and I think there is a fair shot of that happening right now.
Okay.
So all eyes on the pattern I look for. Yeah.
We'll have to see next week as these ETFs go live, whether or not we see the massive sell-off from the Grayscale Trust, or if perhaps we see we actually see those flows stabilize and perhaps some other flows coming in for the other ETFs that are going to be going live.
On the offside that we don't get the correction, then we are definitely going for somewhere around 3,800 or so. That's for certain. Like we are going to test this liquidity. Yeah, 3,881. That's just
okay.
We consolidate here. You get this flip. I think if that is the case, we don't correct. We just jump out of the zone. We consolidate probably for a day over here. That is your confirmation. And then you just run up. And it's an easy invalidation as well. If you lose the 3,550 zone, basically, we're dumping down to 3K. So you can, because it would then mean all this run up was just to take the liquidity in this area. And then, there wasn't enough. It was a trap. We're going back down. But yeah, this is what we have to wait and see. So the levels are very simple. Clear this 3,527 level. We are going to 3,881 or even 4,200 and so on. Lose 3,225. We are going back to 2,800 levels. If we range in here, it's basically a Monday range play then. Just wait for a correction as low as possible and keep DCAing over here till 3,200 and play the ETF game. Then, you are making a bet on what the ETF is going to be like next week. That is the play. Like, are you confident that it will be absorbed? Great. Are you confident that ETHE will not dump? Users will continue to stay because of the large fees? Yeah, there it becomes, more of a prediction market game. But level to level, this is the game. Lose 3,225. Yeah, we're going down another 10-15%.
Well, we've got some other tokens. I want to make sure we get time for
Sure.
You just gave your analysis from Ethereum. Is there anything else I guess you'd want to add from a BTC perspective before we move on to Solana?
BTC looks great. It looks fine, but it is once again consolidating. And I think it is going to get impacted by Ethereum next week on whatever happens. I'm watching 6 to 500 zone. If we lose that, we can go down and fill the CME gap that we formed over the weekend. And this, once again, I keep on saying, like, this whole thing was a Monday run up, right? And the problem with Monday runs over the past 6 months that we have seen is that over the rest of the week, it starts getting completely retraced. And now the additional burden that we have is that stock markets are correcting, and it's fine. They have to correct once in a while. So the dollar index dumping is bullish, but the stock markets are correcting. We have to let them finish that move. And we had a huge move on Bitcoin. So it is going to do a bit of corrections. Let it come down to 62,500 or so. And then it is a good point to take a small position and, hope for a CME gap. And if
Hope for a
these
CME
two
gap.
levels hold, and we are good. But
All
for
right.
now, it's going to stall. Yeah.
Well, let's move over to Solana. Get a little bit of that meme coin action that we were just saying is not that exciting. I think last week we were expecting something
Solana is
perhaps
not
going all the way
that,
down to
yeah.
130. Now 161. Is it overbought?
Well, we did go to 130. So we went much lower. So Amit was right that we probably get a hit lower. And I think it went to 128. Yeah, it went to 128, 130 somewhat. So not bad. He did expect that we go down for a correction, and we did it.
Mhm.
I was quite bullish on Solana, and that ended up happening as well, but not in the same anthology that we thought. It happened in a different chronological order. But this whole zone over here, it's a liquidity zone. So I'm not confident until we flip this zone. I don't think we should be overly bullish over here. I think we need to flip this zone. This was a full resistance zone for nearly 1.5 months. And that's why it's also consolidating over here. We have to flip this block. I think it is somewhere around 175.
Mm.
Yeah, somewhere around 175. And if we flip that, I think this is going to 250 or much higher, probably making a new all-time high. So it's going to be an easy play. Wait for a 10% move. You will also see what else is happening elsewhere, and then you get a good shot. Now,
Well,
I have something interesting. This is showing up. You see what you're seeing on the Solana overall rating?
mm-hmm.
That's a huge run up.
Yeah, I was going to ask that. So
Yeah.
you front run my question. Great.
Yeah.
So it actually looks like it's getting from all the models that we have. And for all those who are curious about the token rating, we've had one interview with Ben Lilly where he starts to talk about sort of his origin story of how he gets to those ratings. We just recorded another one where he gives a deeper dive into that framework to actually how they come up with this score, which has a lot of rich information that flows into it. But it's been a very useful tool in terms of understanding where these tokens may go next. So the bottom line that we have here, and this is sort of a relative scoring here, it's showing that the token rating is increasing, and this is predictive of typically, or it has been a predictive of price movements.
So it has been predictive, but the way I use it is I look at it as more as a confirmation from a fundamental standpoint. So let's say I'm bullish on Solana. Now, for example, what happened also is that I think we had a call somewhere in this period. So when I was having this call with our team, with our quant team, and discussing about Solana, where do we stand? Is it going to do well? Yeah, somewhere around 133, late of June. The perception was that, and I think Bentley even pointed out to me, look, the Solana rating is dropping, right? So be a little bit cautious, because the system is not saying that there is a confluence, like order flow seems to be great, fine. But the rest of the things, the rest of usage, rest of fundamentals doesn't seem to ring the same bell. And that's when actually I started putting more, analysis on this point. And then we saw a small bump. But then after this retest of the 128 zone, we've seen a huge jump in Solana. So activity is starting to come back in that chain again. And it could be meme coin, but meme coins have not gone up crazy yet. But probably there is some activity that's coming up over there, and that's why we are seeing a huge uptick. And that is, I think, compared to ETH, Solana has a good, like has no bearish divergence on the rating front, at least. With the price strength and the rating, it's at least confluent, right? So, which is why it's not a bad idea to keep focusing a little bit on Solana. And if we flip this zone, it can be actually very bullish. So until then, like pay attention, keep watching, keep looking for a very good pullbacks to get back in. And this is a way how you can use these rating metrics as a little bit of confirmations, because you always see that the activity and the fundamentals of the ecosystem go down before the price starts to go down harder.
Right.
So there is a divergence that starts popping up early onwards, right? So this could be a little bit of an early sign that, okay, this might have more legs to the game. Well, unless this starts dropping down crazy, this rating starts dropping down crazy, it's a different thing. But so far seems good, which tells me that we just need to flip this level. It's a 10% pump that is required, and a confirmation on a weekly, and then this is just going to fly. And
So,
ratings is basically supporting that.
So from a trade perspective, risk management, if it breaks through that resistance zone, are you looking for a retest of the bottom part of that zone before you would take an entry?
Yeah. If it is above 174 on any weekly close, I think we're good.
Okay.
Definitely, you need a daily close above it and consolidate. Great, but if it is happening on a Friday and on a Sunday, you're seeing a weekly close above 174, that is great. I think it's more than enough confirmation that you can target somewhere around 230 and 250, provided the ratings are still consolidating and staying above 50 at the very least. But if they start dropping down and start forming this pattern, right, that won't be great. The same pattern that you saw in March, if they start dropping that way, then that's not great. Then we are probably into the distribution end of that particular leg. So far good, so far great, but 160 is not a place you long.
Ben Lilly said in the chat, LSTs on Solana, Lego. I think we're seeing some new activity, potentially some new green shoots on Solana, which may be bringing, helping out with that score. Let's kind of continue to monitor how that's going to play. We have two more tokens I want to get into. That would be Cardano and Avalanche, talking a little bit about those. Before we do that, though, I want to tell everyone, if you're out there listening, you're enjoying the content, we're going to be bringing this back every Thursday. Be sure to subscribe to the Exchanging Good handle here on X, where we're broadcasting live. We're also putting these shows on YouTube, if that's a better venue for you to consume. Definitely check that out and subscribe to that channel as well. But before we do that, Benjamin, I want to ask a kind of a soft question before we get into some of the harder stuff on the trading, because we've talked about this offline. There's so many questions from traders kind of getting into and looking at, how do I start to trade crypto successfully, right? How do I actually get into this game? And it's not just a flash in the pan. I think I was looking at data, I've shared some of it with you and others, that most day traders just have an abysmal record, right? They're lucky if they survive a month, and after 5 years, very few are actually even profitable. You've been doing this for a long time. What's the lesson that you would share with them to kind of get this game started?
So one of the biggest mistakes that people do is basically people with sub 100K portfolios do. They make the most mistakes. The ones with 1 million and higher, they're a different breed. They also do mistakes. They also gamble and take up 50x leverages. But the sub 100K portfolio are the ones who make a lot of mistakes because they want to make that million in a year. They want to retire in a year because it's a bull run. How do I not use my 100K or 10K and just make that million and I'm done? I just retire in Thailand or Indonesia. They try for it, but the problem is you doing leverage to do that is a very tricky point. And you get so emotional, and that's not the right way to go. What they miss out on is having spot exposure and then using the spot exposure to leverage. So yeah, they have to get spot exposure. Basically, everybody needs to be in spot first, and then you take the leverage additionally to create more cash. That's where the Bybit unified trading model comes in. So put in the collateral, hold it. Even if you miss a few trades, you still are exposed directionally to the market. So BTC continues its run, you stand to make gains. It's fine if you did not make 10x.
What I'm hearing from you is that really the first error that they're actually making is having expectations that they can make these outsized returns without having the requisite skills to do it. Right? I mean, you
Well,
just playing
skills
the
is very
leverage game is
different
very
game.
difficult, right?
Skills is very difficult to achieve. Like you can work for 5 years, 10 years, 20 years. Like we've seen what happened to Melvin Capital and so many funds in TradeFi who basically got blown up with just one trade, despite any type of risk management. It's just the confidence that you'd get after being in the game for a while that can also kill you. This is irrespective of how well disciplined you think you are. So that's why it is easy to stay in spot, and you use the spot to generate additional oversized returns using leverage. And this is where exchanges like Bybit and Binance come in and give you this unified option wherein you can take up a little bit of leverage and play around and create that cash and use that cash like your yield. That is the additional your yield you're getting apart from having an exposure to a volatile growing market. Imagine like if you were able to cash out your staking yields as like a passive income, and you're using that for your survival, right? And you already have exposure to it. Those are the type of models. That's why you have staking yield having such demand, right? Staking having so much demand is for the same reason. But what people don't understand is you are still an active trader over there. It's not so much of a passive investment. Even if you're taking a staking yield or whatever, you still have to manage things. You still have to monitor. If it gets unlocked, you still have to make a decision what you want to do. So your core investment into ETH spot or BTC spot, the core portfolio that you create at first, you hold, you see how far you can maximize, hedge it using options if you need to. But if you want to create more cash, you don't sell that spot and go and like start leveraging. Instead, keep the spot and start doing a little bit of leverage. So whatever USDT you're able to get on top of it, you can cash that out and take care of your expenses. If you're a sub 100K portfolio, this is how you have to manage. Don't be in pure USDT. You don't need to. You have these toolings. You don't get these type of toolings in TradeFi half the time. Like nobody gives you a easy credit line for a retail. You can't go to Robinhood, buy Nvidia stock and use that to do leverage. You can't. You cannot even use that to get a USDT collateral or USD collateral to do something inside Robinhood, right? So crypto gives you that opportunity. So use it wisely instead of trying to say like, okay, I bought 1 Bitcoin, now I want to convert it into 10 Bitcoins. Like it's great if you're able to, but that shouldn't be your primary goal if you're a sub 100K portfolio. What your goal should be is like, great, I have this 1 Bitcoin. Can I make another 30, 40K in a year or 20K in a year or a 10K in a year, of USDT? If you're able to do that, that's still really good. You are generating additional yield, which is becoming your cash flow, while you have an asset which is going to grow in value with all this TradeFi that is coming into the market. And in the next 10-year game, probably this is a $10 trillion market when it comes to Bitcoin, and you have got an exposure. So that's wealth building.
That's wealth building. All right, I do want to give us enough time to cover Cardano and Avalanche, but I think that's really good perspective for all those to level set on what they can really look for over the course of any bull run. Really level setting on your priorities and what you can get out of your assets. Okay, let's actually move on. I want to talk a little bit about these tokens. We've got Cardano and Avalanche, and I think a lot of people were perhaps at the beginning of the week seeing some of the momentum in the market. They're asking, are there trades in some of these other L1s? Do they look like places that you want to park some money or maybe even make an active trade? Let's start with Cardano. Is this a trade this week?
Yeah. I'll start with Avalanche.
Oh, you'll start with Avalanche. Okay, well, that's not a good sign for the Cardano hedge.
Cardano, I'll come at the end because I can talk a lot of it.
Okay, all right.
I have really friendly stuff to talk about it. So when it comes to Avalanche, we bottomed at $8. We went up all the way to 65. Wow, that was crazy run. But yes, it has given up almost it's right now trading at 1/3 of its value, and it
Mhm.
is consolidating over here. It doesn't look crazy bullish for me. It's probably we have a good shot at going and testing the 30 resistance level, and the order flows weren't that great either. I checked it out earlier before this call. It wasn't so crazy bullish. I don't think there is some crazy demand on the Avalanche side. Token ratings also, we see it's still a diminishing rating score. Sure, we had an uptick, but that's also because of the price trend and a few other metrics. I don't think there is much to do with alternative L1s, compared to BTC, ETH, and Sol. Sure, Avalanche has Trader Joe's, and there's a lot of those activities happen, but there's no outsized differential activity that is happening. I think, at least in this summer, to say that Avalanche has some fundamental narrative. If it does recover this 30 level, then we are looking at a good run up. So there is definitely an opportunity. Once we clear 30, we can do another 25 percentage pump. So that's what I would play. Right now it's not so attractive for me.
Okay. So keep your hands off the Avalanche unless it's able to push above the $30 mark.
Yeah, that's what I'd wait for. It wasn't a crazy run up in my opinion,
And is
because
the bot?
BTC, if you look at even the Monday run, right?
Yeah.
It was okay. It was like 10%.
Your
It wasn't
enthusiasm says it all.
crazy. Yeah.
This is not something you're looking to dive head first into.
I mean, if you look about it, July Open, we did not recover the July Open, right? BTC has recovered the
Right.
July Open. I think ETH has also recovered the July Open, but Avalanche did not recover the July,
Mm-hmm.
this local high that we have or whatever. So I'm not so crazy bullish on it. It's okay,
Okay.
let it consolidate. Maybe it takes another month and it needs to consolidate in the zone. Then probably it becomes an accumulation zone and we can target 50s and 60s. But keep it simple. Recover 30 and we'll talk.
All right. Put a tattoo on the body on that one. All right. Let's move on to your perhaps favorite token of all. I think you're always talking about how much you love this token. It is the token of your love. Let's get
Yeah.
into Cardano.
To be honest, it's not that bad compared to Avalanche. Actually, it has recovered the July level. You see,
Mm-hmm.
this is at least it closed above that high that it was retesting this resistance. On a level basis, it has recovered this, but we are already seeing a lot of weakness over here. So if it closes below this, then probably it is going on a deeper correction. But I think Cardano is not making any moves uh, to based on its fundamentals. I think it is just reflectively playing along. It's a large cap. There's a lot of market makers sitting there and milking, the movements. It's just working as a slow beta to BTC and ETH. So it's nothing.
It's nothing.
Nothing.
So, and
I mean, don't get me wrong. I have a friend firm in Dubai who's basically working with Emurgo and trying to launch. They're launching a stable coin on Cardano, and I was like, I like you, but I hate you. Um, I was like, what is the point? What is the point of doing it? Because there's nothing going on over there. It's just a market makers trading. Nobody, it's like, when have you ever heard of someone saying like, "Hey, I have so much Cardano, and I'm so bullish on it, and I'm using it on a daily basis." Like, why?
well, I
Why?
mean, I do feel like in the last bull cycle, it was Cardano everywhere. If you were new to crypto,
Because
it
of
was
the
kind of like
smart contract
XRP
narrative.
previously, right? What's that?
They were going with the smart contract narrative. So after
Yeah.
nearly 5 years of PhD and doctorates and additional postdoctorates, Hoskinson and his team basically said, "Hey, we found this new thing called smart contracts. We are going to implement it to Cardano. And this is going to be a game changer. It's going to be cheap, and you can, at that point, ETH was going crazy in its gas fees. At one point, you had to do a minimum of $100 gas fees to do like $10 transaction and so on. So Charles was like, "Hey, we are a game changer. We are going to bring in smart contracts. That's so interesting." Well, look at where it is. So
Yeah.
it went all the way to $3, I think, and then basically went to, I don't know, 20 cents.
Mm-hmm.
Yeah. I mean, this is crazy. It's so stupid. This is so incredibly stupid.
Yeah, for all those
I
listening,
mean,
you can tell he's
yeah.
super bullish on Cardano long term. He really thinks it
People.
has a future.
Okay, so as a technical trader, forget the sticker. If I don't see the sticker, okay, and then I
Yeah.
come just based on technicals and say, okay, now we dropped below over here in October 2022. We have consolidated below 40 cents for nearly 2 years now, right? It's almost 1.5, 2 years. And
Mm-hmm.
the entire run of from October 2022 till the breakout in December, this has been below 40 cents, right? Now, we had a little bit of a scare and a little bit of correction from BTC, and it basically gave up the 40 cents level and came back down. It didn't have any problem in giving up that level, right? After a nearly 18-month consolidation below 40 cents, if we have to consider this as accumulation, you should not see it close below 40 cents and go back down to 30 cents, right? If this is
Mm-hmm.
crazy bullish. So, where did this accumulation go? Why is it not reflecting over here in price? A small distribution we had and it became a huge correction. Now, I don't see any point, but if someone was going purely on technical basis, you needed to stay above 40 cents. Like every time it closes below 40 cents, just get out. There's no point in it because you can see it all the way go down to 23. I see no sense.
Mm-hmm.
Every time it recovers, you have a good shot, and then you can, like zoom in and yeah, you can then aim for 50. Then basically you go level to level and see based on how the rest of the market is. But fundamentally, I see no reason with this shit.
Okay.
Yeah, no,
I'm glad you sugarcoated it for
would use
those Cardano
pure,
holders.
yeah, I would use pure parliamentary languages over here.
Yeah. Well, so if you've got a Cardano tattoo and you're expecting this to be the savior of crypto, you may not enjoy Benjamin's take, but from a technical perspective, the chart doesn't
Yeah,
lie.
unfollow me. If you do have a Cardano tattoo, unfollow me. I don't need
All right.
to.
Well, I'll be honest. It sounds like we've got a couple of trading possibilities here. Solana seems the most bullish. BTC and ETH seem like a little bit of a wait and see with some potential opportunities coming up, and obviously big week next week with Ethereum ETF. And lastly, Cardano and Avalanche. If you've got questions specifically how to play that, I suggest rewatching the analysis that Benjamin just put out there. I know we've got a couple of comments here from Me Man talking about everything being on Trump's election coming out in 2024. Either the market's going to absolutely go thermonuclear, it's going to absolutely nuke itself if he doesn't win. And then we've got a couple of questions that came in here on Mount Gox. But today, guys, we're going to have to wrap it up. We'll be able to come back to those, I think, over the next couple of weeks and bringing back some more token plays. So, Benjamin, I want to say thank you for coming on the show, breaking down the trades. Look forward to having you next week. Hopefully Ahmed has recovered from whatever illness is taking him down, and we can come back with a couple of trades and figure out what the next 5 tokens, if there's anything we're trading. But with that, I will say this is Marconi White. Definitely have some dry powder. There will be some opportunities. Times are about to get very, very interesting. The biggest play of the year may be happening in a couple of months. You're going to want that dry powder ready to deploy. And be safe out there. Don't do anything crazy. Listen to the good rational recommendations that came out from Benjamin, how to think about your portfolio. All right. Well, this is Marconi White signing off.